So a quick peek into another income statement. This one specifically Tesla Incorporated. Certainly, whether you love them or you hate them, Tesla has had a huge impact on our world and especially on how we approach automobiles. So let's dive in here for a minute and see what we can tell from an income statement for this company. So first of all, we can see, like others we have seen before, they have multiple years, and I've kind of cut off 2022 so that we can focus just on 2023 and 2024. And one of the things that we should note is the revenues. While total automotive revenues actually dropped between 2023 and 2024. So one of the stories, you might say, the pictures that are being painted here, is that revenues having to do with sale of automobiles, okay, has gone down from 2023. This year ended December 31st. These are all in millions, so it went down from 82 billion to 77 billion. That's a $5 billion decrease. So that's part of the story that we're being able to see here. Now, total revenues went up, but not by very much compared to, this is 96 billion, this is up to 97 billion. So 1 billion increase because of the increase in revenues from energy generation and storage and services and other. That's where the increase is, not in the automotive part, but in the solar energy specifically is where Tesla is providing a lot of product, and you can see that revenue is up. So year to year there is a slight increase, but it isn't in the automotive part of their business. Now, the other thing, and then remember, revenues are the things that we've earned. That's what we've provided to our customers in terms of providing them with a product or a service, automotive leasing, provide them with that, and in return, they promise to pay us, and we believe that they will pay us for those services. So total revenue, almost $100 billion. Now, if we go to the next section, after revenues comes expenses. Now, as was pointed out, cost of revenue or cost of goods sold or cost of sales is the first expense that should be listed because it's so important. Because it's unique, it doesn't sound like it says cost of revenue. It doesn't say expense in the name, but it is the first and usually the biggest expense. So this is how we would look at this. Their cost of automotive sales. So the automobiles that they sold for 72 billion cost them to make 62, just under 62 billion. Okay, so about 10 billion, or about 14% of the cost of the Tesla that you buy is some gross profit. The rest of it goes to cover the cost of making that. So that's not a very high percentage. They get some credits from the government because they're selling these all electric cars, which adds to their revenue. Their automotive leasing, their revenue is 1.8 billion and their cost is only 1 billion. So they're making, on a percentage basis, not nearly as much money from that, but as far as a percentage, they are doing better. Okay, so total automotive, 77 billion in revenue. It costs them to all of that automotive, just under 63 billion. Energy generation has increased a lot in terms of revenue. Expenses are still, the cost of those installations of solar energy and things like that are 7.5 billion, so 10 billion. But that's still a better percentage-wise than their automobiles in terms of what they're making. And then other their services and other, their revenue is 10 billion and their 10.5 billion, and their expense, the cost of those services, the people that provide those services and that sort of thing is 10 billion. So their total cost of revenue is 80 on that $98 billion of revenue. So they make a gross profit. Remember, gross profit is revenues minus the costs of those revenues, the cost of the stuff that we're selling or providing to our customer. And they have then 17.5 billion left over after they cover the cost of their automobiles and their services and their solar energy installations. So they then spent or used 4.5 billion for research and development. That's another expense. Selling, business, general, and administrative. That's all kinds of office and all that other type of thing. 5 billion. Spent some money restructuring due to probably the drop off in sale. Had to get rid of some dealerships, things like that. Total operating expenses, okay, other than the cost of the actual automobiles, is almost 10.5 billion. So they make $7 billion from their operations. Then they have some interest income because they have some money in the bank. Okay, pay some interest expense, not a lot compared to the interest income. So they literally are having more interest income than they have interest expense that they're paying on loans that they have. Some other, so they end up with income before taxes of just under 9 billion, which is down from last year, almost a billion.